It can be held via the internet or telephone, so long as it is presented in an interactive format. So here you are with your Series 26 license, or here you will be soon. You have to meet with all the people you supervise at minimum once a year to discuss compliance-related matters. It can be done on the phone, via a webinar, that'd be fine, as long as there's an interactive format. FINRA also has rules requiring member firms to establish supervisory control systems designed to review and supervise the customer account activity generated by producing branch office managers, sales managers, or others who perform similar supervisory functions, especially those who generate 20% or more of the revenue of the business unit supervised by their supervisor. These systems are designed to prevent and detect potential conflicts of interest that would serve to undermine complete and effective supervision because of the economic, commercial, or financial interests that a supervisor may hold in an associated person and the business being supervised. A person who is either senior to or otherwise independent of the producing manager must perform such supervisory reviews and submit to the member firm's senior management no less frequently than once a year a report detailing the supervisory controls and a summary of the results. So this is just saying that someone unrelated must look over those certain types of people's business. The idea being that whoever that principal is might not be objective enough, might have a vested interest in overseeing wrongdoing, basically. Which of course you would never really do, but there is that concern. So that's why that rule exists. So producing branch office managers, sales managers, and those who generate 20% or more of the revenue of the business unit supervised by their supervisor, those special rules for them. So broker-dealers have these supervisory procedures, they're in writing, and then once a year, all broker-dealers are required to review their supervisory procedures. So they look at their supervisory procedures, they look at the business in which they engage. They make sure that they have the right procedures in place. So maybe something's changed over the last year where they're engaged in a different area of business that they weren't before, and they need to adjust their supervisory procedures. So at least annually, an internal inspection of those procedures. So annual review of written supervisory procedures. Annual review. It's also true that broker-dealers must inspect offices of supervisory jurisdiction at least annually. So annual review of the written supervisory procedures, annual review of all OSJs. We also are required, broker-dealers, to annually review any branch office that supervises one or more non-branch locations. All branch offices, if they supervise a non-branch location. So if they supervise an insurance agency, for example, then we also have the annual review rule. Not all branch offices supervise non-branch locations. So if the branch office does not supervise a non-branch location, then the branch office is subject to a review every 3 years. Branch offices that do not supervise non-branch locations must be reviewed every 3 years. It's also true that all broker-dealer firms must inspect on a regular periodic schedule every non-branch location. So no time frame there, just a regular periodic schedule. So the member firm does these investigations, keeps a written record of the dates upon each of these reviews is done, reduces what they looked at, what they found when they did these inspections to a written report. So all of these reviews reduced to a written report, and the written report is kept by the firm for 3 years. Kept by the firm for 3 years. Unless sometimes non-branch locations aren't supervised any more often than, let's say, every 4 years. Then, of course, they need to keep the written report until the next review was done. But the least period of time that they can keep these written reports at minimum is 3 years from the time of the inspection. What does this written inspection report need to include? The testing and verification of the members' policies and procedures, including supervisory policies and procedures in these specific areas. The safeguarding of customers' funds and securities. The maintaining of the appropriate books and records. Supervision of customer accounts serviced by branch office managers. Transmittal of funds between customers and registered representatives and between customers and third parties. Validation of customer address changes. Validation of changes in customer account information. These procedures must include a means of customer confirmation, notification, or follow-up that can be documented. So the supervisory rule, for sure going to have at least a couple of questions on the test in that area. FINRA Rule 3130 requires that all broker-dealers have a minimum of 1 Chief Compliance Officer. So we call that person the CCO, Chief Compliance Officer. So the CCO. So we talked about the CCO. They're listed on Schedule A of Form BD. The CCO is a principal, usually a 24, but could be you with your Series 26. Chief Compliance Officer, definitely a principal. The CCO has to must meet with the broker-dealer's Chief Executive Officer at minimum of annually every year. I would hope they meet more often than once a year, but that's the least often that the CCO and CEO of the broker-dealer can meet. The member firm's Chief Executive Officer must certify annually that the member firm has in place processes to establish, maintain, review, test, and modify the firm's written compliance policies and written supervisory procedures to achieve compliance with applicable FINRA rules and federal securities laws and regulation. So how can the CEO sign off on that unless the CEO meets with the CCO at least once a year? So that's the requirement. Each member firm is required to establish procedures for the review and endorsement by a registered principal in writing on an internal record of all transactions. So that was something I mentioned before. You're responsible for endorsing all securities transactions. You're also responsible for reviewing incoming and outgoing written and electronic correspondence of your registered reps that are made with the public for investment banking and the securities business of your firm. Principals are required to review the correspondences of all registered reps that they supervise. So the way that we've got when they say review of correspondence here, they don't necessarily mean correspondence as we'll learn within the definition of retail communication and correspondence. They mean it just generally. So this idea of review of retail communications, institutional communications that the registered reps have put together. So, and the whole idea of an email being a correspondence, the definition of which comes up in a later section in the course. It is the responsibility of all broker-dealers to ensure that they investigate the character, the business repute, the qualification and experience of any person that they would like to employ before they employ them. So exactly what kind of a background check they do is really up to the firm. There's not a FINRA rule about it yet, but I think that there's one coming. I actually really do, but that'll be on the test someday. But the idea is to make sure that you're hiring good people. If the person that you're hiring has been a registered rep at another firm, then when they left that firm, what's filed is called a Form U-5. All member firms are required to review for their new hire, the person to whom they're filing a U-4, the Form U-5 within 60 days following when they filed Form U-4 for them. So let's say Sarah left her old firm, Sarah's at the new firm, you hired Sarah. You file Form U-4 to apply her for registration at your firm, and you look at her U-5 when? Within 60 days of when you filed the Form U-4. Now, the applicant for registration, that's Sarah in my story, is required, if her new employing firm asks her for a copy of her Form U-5, she's required to give it to her new firm within 2 business days after she's been asked for it, if she has it. Her previous firm was supposed to give it to her. If they didn't give it to her, she's going to ask her previous firm for her Form U-5, and then when she gets it, she has 2 business days to give it to her new firm, her new employing member firm. So anytime your new firm asks you for that form, you have to give it to them within 2 calendar days. Accounts, records, and reports of member firms. The SEC has Rule 17A-3, and it's all about books and records. So books and records. Now this is one of those topics that comes up more than once, and I'm going to cover it once. So even though we say critical function 1 is 16 questions, because it is 16 questions, sometimes there's going to be more questions later on within the test. So it does seem like a lot of information for 16 questions. Trust me, when I was putting together the course to follow the content outline, I thought, wow, they sure put a lot of stuff in here. But then they also put it in there, later on in critical function 2 or critical function 3 again. And I'm only going to cover most of those sorts of things once, sometimes twice. Depends. This is one of those things you might see more than once. Accounts, records, blotters, ledgers, and other records of original entry reflect receipts and disbursements of cash, purchases and sales of securities, receipts and deliveries of securities. So these are really records of original entry. Records of original entry. There's a lot of dates here you're going to have to practice. So records of original entry must be kept by the broker-dealer for 6 years. The first 2 in a readily accessible place, which generally means in the firm's office. 2 years readily accessible. Records of original entry. So blotters. Broker-dealers maintain blotters relating to the purchase and sale of securities, the receipt and delivery of securities, and the receipt and disbursement of cash. You do need to be aware blotters must reflect transactions as of the trade date and must be prepared no later than the following business day. Blotters must be prepared no later than the following business day. General ledger is also an item of original entry. They want the general ledger. I used to work in general ledger at Motorola many years ago. It's accounting records of the firm, basically. So the general ledger includes an accounting record of the broker-dealer's financial health, including assets, liabilities, and net worth. The financial statements are prepared from the general ledger. The general ledger must be kept current so as to ensure compliance with the firm's net capital requirements. Must be updated a minimum of monthly. So general ledgers updated a minimum of monthly. Blotters updated no later than the following business day. Stock records show all of the securities held by the broker-dealer, including the ownership and location of the securities. Stock records must be posted no later than the business day after the settlement date. Business day after the settlement date. Customer ledgers are the customer's statements. The customer's margin account and cash account ledgers must be maintained as separate records. Customer ledgers must be posted no later than settlement. So both the stock record and the customer ledger, that makes sense. No later than the business day after settlement for the stock record, and customer ledger no later than settlement. To settle is to pay. So blotters, general ledgers, stock records, how long are these kept for? 6 years. So that's one of the longer rules. 2 years readily accessible. We also have rules related to order tickets must be prepared at the time of the transaction, which makes sense. Order tickets prepared at the time of the transaction. Confirmations are prepared and mailed either the day of the transaction or the following business day is fine too. Account records should be prepared prior to the transaction. What's in the customer account record? Broker-dealers must ensure that for each account with a natural person as a customer or owner, there is a record, including. So this is information in a customer's account record. The customer's or owner's name, tax identification number, address, telephone number, date of birth, employment status, including occupation and whether the customer is an associated person of a member, broker, or dealer, annual income, net worth excluding the value of their primary residence, the account's investment objectives, an indication of whether the record has been signed by an associated person responsible for the account, if any, and approved or accepted by a principal of the firm. One of your jobs will be to accept all new accounts. If the account is a discretionary account, the dated signature of each customer or owner granting the authority and the dated signature of each natural person to whom discretionary authority is granted. Now, this customer account record rule is what we call an SEC rule. It's Rule 17A-3. So under this SEC rule, we have a signature of the associated person. However, FINRA Rule 4512, which is a totally different rule, but it's similar, it's about similar things. Under FINRA Rule 4512, we want the name of the associated person associated with the account, where the SEC Rule 17A-3 wants their signature. So the FINRA rule is much newer. And I don't know, if you've ever seen my signature, you have no idea what my name is. Does yours look like that? So the FINRA rule 4512 is newer, and it's really designed to make sure that we know who is the associated person with that account. What's their name? So under SEC rules, we take the registered rep's signature. Under FINRA rule 4512, we actually need their name, not their signature. If this is a joint account, the account record must include personal information from each joint owner who is a natural person. However, their financial information may be combined. Natural person does not include a corporation, a partnership, limited liability company, or a REIT. The account record requirement does not apply to an account where the account is owned by the trustees of a trust or a trust that is a legal entity separate from the holders of its beneficial interests. The account record requirement would apply, though, to UGMA or UTMA accounts. So those are Uniform Gift to Minors Act or Uniform Transfer to Minors Act accounts. So those are accounts really for the benefit of a child. The account record requirement applies to IRA accounts and 401k accounts, qualified plans, where the beneficiary of the account is a natural person. So customer account records. Customer account records. So broker-dealers must prepare the records. Customer account records. And keep the records. Ah, look at that. Both the same. For 6 years. From when? From the closing of the account, or from when the information was last updated or changed. So customer account records kept for 6 years from when the client closed the account or from when the information was last changed. Broker-dealers are required to furnish the customer account record to customers if, in the previous 36 months, they have made for the customer a suitability determination. So it's very common that a recommendation has been made to a client to buy or sell a security, or even to hold a security. If that's the case, then the customer must have a minimum of every 6 months must be given a copy of this customer account record, because the basis for the determination as far as suitability really is the information found in this form or in this file. So the customer, anytime a suitability determination has been made in the previous 36 months, must be given a copy of their record every 36 months. It's also true that whenever a new account is opened, so every new account, the customer must be also given a copy of their customer account record within 30 days from the opening of the account. So new customer gets a copy within 30 days. And then whenever suitability determinations are made every 36 months, they also get a copy of their customer account record. If they're not making suitability determinations, then the every 36 months portion of the rule would not apply. SEC Rule 17A-3 also tells you exactly what's going to be on a customer's order ticket. The test likes you to know this. It's always a question on the test. We talked about already, order tickets are prepared at the time of the transaction. How else could they actually do the trade? So what is on it? The order ticket must include the terms and conditions of the order or instructions and any modifications or cancellation. It must identify the account for which the order was taken. It must identify each associated person, if any, responsible for the account, and any other person who entered or accepted the order on behalf of the customer, or if a customer entered the order on an electronic system, a notation of that entry. The order ticket must describe whether the order was entered subject to discretionary authority. All discretionary order tickets must be marked as such because they are responsible, the principal, you, would be responsible for reviewing those. You would be responsible for that. The order ticket must identify the time the order was received, the time it was entered, and the price at which it was executed. The order ticket must also include the time of execution or cancellation. Records related to order tickets. So order tickets prepared as of time of the transaction. Records, however, related to order tickets must be kept for 3 years by the member firm, 2 years readily accessible. 2 years readily accessible. So order tickets. Broker-dealer firms must maintain for each associated person a record containing the following: a list of every office where that associated person regularly conducts business, the associated person's CRD number, so if they're registered, they have a central registration depository number, and every internal identification number or code assigned to that person by the broker-dealer. So associated person, location, and identification number records must be maintained by the firm for 3 years after the person has terminated employment with the firm. So associated person records are maintained for 3 years after the person has terminated employment with the firm. Broker-dealers must also ensure that they have records related to each associated person as it relates to their compensation. So a record containing each purchase and sale of a security attributable to that associated person for compensation purposes, the amount of compensation attributable to each purchase or sale if monetary, and a description of the compensation if it's non-monetary, and all agreements pertaining to the relationship between the broker-dealer and each registered person. Broker-dealers must maintain these compensation records for the same period of time as order tickets, 3 years, 2 years readily accessible. So the CRD number, the information related to the person who no longer works at the firm, is kept for 3 years after they terminate. Complaint records. So under SEC Rule 17A-3, broker-dealers must ensure that for each associated person, there is a record of each written customer complaint received by the firm concerning that associated person, which includes the complainant's name, address, and account number, the date the complaint was received, the name of any other associated person identified in the complaint, a description of the nature of the complaint, the disposition of the complaint. Instead of a record, the firm may maintain a copy of each original complaint in a separate file by the associated person named in the complaint, filed by name, along with a record of the disposition of the complaint. Under SEC Rule 17A-3, complaint records must be kept for 3 years, just like order tickets, just like the compensation records, 2 years readily accessible. 3 years, 2 years readily accessible. Except, FINRA. FINRA has a different rule. So FINRA rules say associated person complaint records must be kept for 4 years. So of course, broker-dealers are going to comply with whatever rule is longer, but just be careful on the test. So FINRA rules say complaint records are kept for 4 years because that's the longest time period in between firm inspections that FINRA may ever have. So the longest between a firm inspection that FINRA can ever have is a 4-year cycle. So complaint records under FINRA rules are kept for a different period of time. So be careful, 4 years. One of your responsibilities as a principal is going to be to oversee the communications with the public related to the member firm's business. So your firm must keep copies of the fact that you've done this duty. So communication supervision records. These records must be kept for 3 years, the first 2 in an easily accessible place. So the communication supervision records do not need to be separate from the records related to the communication itself. So the communication can be kept on record and then a copy of your approval of the communication for 3 years, 2 years readily accessible. Contact person records. All broker-dealers must ensure that there is a record for each office listing all individuals by name or title at that office who, without delay, can explain the types of records maintained at that office and the information that they contain. Contact person records must be kept for 6 years, 2 years in an easily accessible place. So contact person records. So we've seen the 6-year rule before. Contact person records kept by the firm for 6 years, 2 years readily accessible. Responsible principal records. Broker-dealers must ensure there's a record listing each principal responsible for establishing the policies and procedures reasonably designed to ensure compliance with any applicable federal law or rule of a SRO of which the firm is a member, requiring principal acceptance and approval of records. Appropriate records related to responsible principals must also be kept for 6 years, the first 2 easily accessible. So principal records. Responsible principal records. Also kept 6 years. 2 years readily accessible. So just to kind of make sure, because there is a lot of things in this rule that you have to keep track of. So the 6-year rules, we have records of original entry. So we had that one up here earlier. So also 6 years, 2 years readily accessible. And customer account records, but that's a slightly different 6-year rule. 6 years from when closed or changed, whichever is longer, of course. So this would be the ones to know that have this requirement, 6 years. Customer account records, 6 years from when the account was closed. So just to kind of give you one place with all of those different numbers.